Hey guys, so let us discuss today's CA Inter GST paper. So overall the paper was quite easy. It was not a very difficult paper, not a very easy paper. I would like to say that if you had covered the institute module and you have solved all the questions, past exam questions, this paper would have been very easy for you. There was nothing very difficult about the paper. So let us discuss the first question, question 5 for section B. This is the first question. So it says K&K Limited, a registered supplier of Mumbai, is a manufacturer of heavy machines. It outward supplies, they say it is exclusive of GST. So interstate supply 85 lakhs, intrastate supply 15 lakhs. So the tax, they have given the tax rate applicable is 9%, 9% and 18%. So at the rate 18%, and here 9%, 9%. So total outward tax payable. The details of GST paid on inward supplies during the month of January. So they have given the details of input tax credit. They say raw material A, of which 70% of inputs procured were used and 30% were in stock. So this information does not quite have any effect, but regarding this point 1, they have given an additional information in point 2. What are they saying in point 2? The details of GST paid on inward supplies are available in GSTR 2A except for one item, that is raw material A, for which the supplier has not filed its GSTR 1 for the month of Jan 2020. Hence, the corresponding input tax credit is not reflecting in 2A of K&K Limited for the month of January. Okay. So, I hope you guys will remember the discussion of rule 36.4. Yes, if you don't remember, I will show it to you. Page 160 in my book. Okay, so rule 36.4. What does rule 36.4 say? Input tax credit availed by a registered person, the details of which have not been uploaded by the supplier under subsection 1 of section 37. This is the situation which they have given in the question. They say it shall not exceed 10% of the eligible credit available in respect of invoices, the details of which have been uploaded by the supplier under subsection 1 of section 37. So this is an important point to be noted. So now what is happening here? This person has not uploaded his GSTR 1. So now we cannot take this 60-60. We have to take only 10% of the eligible credit. 10% of eligible credit. Now we will see what other credits are there and we will decide what is the eligible credit. They say raw material B, 90% of the raw material received in the factory and remaining 10 material completely damaged due to road accident on the way of factory. There was no negligence on the part of K&K Limited. So they have given this, but the input tax credit available will be only 90%. I hope you guys remember section 17 subsection 5 blocked credit. If you don't remember, I will show it to you. I will show you that also. Okay, in 70, blocked credit section 17.5 point H, goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. So here goods destroyed are covered, and here there is no point regarding whose mistake it was. So since these goods were destroyed and not received, we will get credit only of 90%. 90%. So eligible is 45,000 and 45,000. Next, construction of pipelines laid outside the factory premises. Very important, outside the factory premises. You remember in section 17.5 blocked credit, we also discussed what is plant and machinery, because on the immovable property, land and building, GST credit is restricted, and they said credit is available for plant and machinery. In plant and machinery, they say that plant and machinery will not include but excludes pipeline laid outside the factory premises. That means this will be considered under blocked credit. This will also be blocked. Okay, so as per this, if you come back to our question, this will also be blocked. Next, insurance charges paid for trucks used for transportation of goods. Very important. Again in section 17.5 blocked credit, if you see the credit was blocked for passenger transport and not for goods transport, and since the credit is not blocked for the vehicle, insurance charges credit also can be claimed. So this 55,000 is eligible credit. Okay, so the total eligible credit is how much? This 45,000 plus 55,000, that is 1 lakh. 1 lakh and 1 lakh. And now what we studied, 10% of eligible credit can be claimed in respect of invoices which have not been uploaded. So 10% of 1 lakh, 10,000. So you can claim additional 10,000 and 10,000. So maximum input tax credit 1,10,000. 1,10,000. Yes, all of you. So this answers our question. First question, amount of eligible input tax credit for the month of January, then net minimum GST payable in cash. So now, as per the set off rules what we studied, this 1,10,000 and 1,10,000 will first be set off against respective CGST and SGST credit. So it will get set off here 1,10,000, 1,10,000. So balance will be how much? 10,000 gone. So 25,000 here and 25,000 here, and this will full be payable in cash. So 1,35,000. So 25 will be payable here, 25 will be payable here, and this 15,30,000 will be payable in cash. So this solves our first question. No opening balance of any input tax credit. So this is done. This is an easy question. Next question, valuation question. This is also quite easy. They say the list price is 9,50,000 exclusive of taxes and discounts. So this does not include any taxes and discounts. Municipal taxes chargeable on the machine. I hope you remember that any taxes other than GST which we have been paid has to be added to the value. So this 45,000 will get added. Freight charges for delivery of machine. The contract was to deliver it at the factory premises of the client. So this 65,000 also will be added. Next, normally gives interest free credit period of 30 days. Okay, after that it charges 1%. Fine. But they say they paid after 45 days. This is very important. SQM Limited waive off the interest payable. So nothing is payable. When nothing is payable, why do we have to add anything? So there is no adjustment here. Then SQM Limited received 50,000 as subsidy from non-government organization on sale of machine. The subsidy was not linked to the price of the machine and also not considered in the list price of 9,50,000. Very important. They say the subsidy was not linked. We studied that if you receive any subsidy from government, then you don't have to add. If you receive from non-government, you have to add. But the important point was it should be linked to the price of the goods. If you don't remember, just let's check it in the book. Okay. Subsidy is directly linked to the price excluding subsidies received from central government. So it should be directly linked to the price. And if you have received the subsidy from central government or state government, you don't have to add. Here the subsidy is received from a non-government NGO and it is not linked to the price. So there is no adjustment for this. It is a general subsidy. And discount deducted discount of 15,000 at the time of final payment, which was not as per the agreement. So this discount has to be added to the value. You cannot deduct this discount because post supply discount only as per an agreement which is there can be deducted. This 15,000 cannot be deducted. And 9,500 as TCS. I hope you guys remember that when we discussed valuation chapter, we studied a circular telling that TCS cannot be considered as tax other than GST. If you don't remember, I will show you the circular 149. See here, TCS under income tax not includable in the value for the purpose of GST. Clearly they have given here. So we don't have to include that. This is as per circular number 76/50/2018. So you don't have to include. So this is the discussion for the second question. Then third. They say in following independent persons, which person is liable to pay GST? You may assume, okay. So let us see who is liable to pay. Veer Transport is paying IGST at the rate 12% and he is a registered goods transport agency. I hope you guys remember that in RCM only that GST will that goods transport agency will fall who has not paid CGST at the rate 6%. That means it is total 12%. 6% of CGST plus 6% of SGST. So total 12%. That means it should be a person who has not paid this. In this case, the GTA has paid 12%. So RCM will not be applicable here. The GTA itself will be liable to pay the GST. Good. Then Mr. Kamal is an unregistered famous author. This is regarding the amendment part, but not a very great question. This is regarding entry number 9A. In 9A they say if an unregistered author is giving the service, then the recipient is liable to pay. So here PQR publisher is liable to pay the GST. There was one more option in 9A. I hope you remember that the author can himself get registered, and if he gives a declaration, then he will have to pay under forward charge. Here there nothing of that sort because he is an unregistered author. So PQR Publication Limited will be liable to pay the GST. Okay. Then question number 7A. I hope you guys remember that persons not liable to register. We studied one entry there telling that person who is supplying exclusively exempt goods or services. Exempt goods or services, he is not liable to register. Okay. Here the situation is, first when he was supplying, the goods was exempt, but subsequently it became taxable. Okay. So on the day the goods become taxable, he becomes liable to registration. In our case, with effect from 1/1/2020, exemption available on Z was withdrawn. So now once he becomes liable to register, within 30 days he has to apply for registration. So in current year also his turnover is 42 lakhs, which is more than 40 lakhs. Exemption has been withdrawn. So he is liable to register. So now he has to take the GST registration within 30 days from the date he became liable to register. That is from 1/1/2020. Fine. Okay. Next question. It is mandatory to furnish the details of conveyance in part B of the EVA bill. Validity of the above statement. I will say it is partly correct because there was two exceptions to this. If you remember, there was one provision 50 kilometers from the place of consignor, C to transport or transport to consignee. If you don't remember, I will just show it to you. Okay. When is it not mandatory to furnish details in part B? When it is not mandatory. Not mandatory when goods are transported for a distance up to 50 kilometers within the state or union territory from the place of business of the consignor to the business of transporter for further transportation, and from the place of business of transporter finally to the place of consignee. So in these two cases it is not required. So the statement is partially correct. Okay. In GSTR1, submission of invoice-wise details of outward supply is mandatory for all kind of invoices issued. Again, this statement is not correct. If you remember, yes, if you remember this table, invoice-wise details is required for interstate and intrastate supplies made to registered person and interstate supplies made to unregistered person with invoice value exceeding 2,50,000. Only in these two cases invoice wise details is required. So in all other cases invoice wise details is not required. Fine. Then next, who can impose restriction on utilization of input tax credit? This question is directly related to the amendment. There was a new rule which was inserted, rule 86A in ITC chapter. So this is directly related to the, in payment of tax chapter. So this is directly related to that. If you remember, see this rule, conditions for use of electronic credit ledger amount. So the commissioner or any officer authorized by him who is not below the rank of assistant commissioner and they have some reason to believe, then they may block your ITC utilization. So the question is direct theory question relating to this rule, rule 86A. Next, Explain the order of discharge. 49.8. Very good question. So I hope you will remember the discussion that first previous dues, then current dues, then any demand as per section 73 and section 74. This was the order. If you don't remember, again I will show it to you. 49.8. Self-assessed tax and other dues related to returns of previous tax period, current tax period, and then demand determined under 73 and 74. Yes, and for this rule, what is self-assessed tax and other dues? So what is tax dues? Tax dues means tax payable and does not include interest, fee and penalty. Other dues means interest, penalty, fee or any other amount payable under this act or rules made thereunder. So it covers both self-assessed tax and other dues, first for previous period, then for current period, and then any amount payable as per section 73 and 74. Next, what is importation of service? So this is a very easy question. If you have studied this chart, that is the answer for this question. So importation of service, so it can either be with consideration or it can be without consideration, in the course of furtherance of business, not in the course of furtherance of business, and related person, then it will be treated as supply with consideration. And without consideration, if you get it from related person, then it will be supply, but from other person it will not be a supply, other cases. So this is the discussion of the paper. Your guys' preparation is going on very good. So I request you to concentrate on group 2. Don't worry about group 1. I hope all of you have done very well in group 1. So thank you.